Alright, so just when everyone starts to think that the NASDAQ is the only place to be and that tech stocks only go up is when I start looking to diversify. It's easy to forget that other sectors even exist and they can be just as lucrative while offering even more security to your portfolio in this John Wayne market. In this video, I'll show you 5 plays in sectors like industrials and consumer staples that are often overlooked but poised for a rally. From a technical perspective, I've conducted extensive analysis to ensure these charts look right, and from a fundamental point of view, I have also vetted the positive catalysts within the companies while also considering the geopolitical factors that ultimately drive price action. All 5 plays are buys 365, but even more so with where we're at in this cycle. So without further ado, and in no particular order, here's what we got on watch. First up to bat is CAT. Governments around the world are increasing infrastructure spending, and Caterpillar is the bidmaster. We've also got major new products on the horizon like the electric excavator, which will be 10x and is likely to boost sales to levels not seen in years. The company is doubling down on research and development, which could lead to even more new products and more government contracts in the future. As you can see, the stock slightly overextended in the short term, so watch for a pullback on the cat, but don't get stuck in the doghouse. Number 2, aka Old Reliable, is Deere & Company. Another industrial empire that's likely to reap the benefits of increased infrastructure spending in the same way that Caterpillar is. There's without a doubt a strong demand for agricultural equipment right now, and Deere is the #1 supplier with a brand name that's second to none. In addition, their construction equipment is top of the line, and the global construction sector is expected to experience immense growth in the coming years. Lastly, Deere is no stranger to innovation. Just like Caterpillar is working on the electric excavator, John Deere has the autonomous tractor in its back pocket. If you thought the AI boom has been crazy, imagine a Roomba drawing baseball stadium-like lines across acres of farmland. Number 3, you guessed it. 3M. Enough is enough, and this conglomerate finally broke its downward trend and is ready to conquer Earth once again. Now, 3M is in the latter process of spinning off its healthcare business, which is expected to be completed in the second half of 2023. This will allow 3M to focus on its core businesses, everything from command strips to welding helmets, essentially unlocking overshadowed value for shareholders. Lastly, share buybacks are imminent. Like many of these picks, 3M have a history of buying back its own shares in bulk, which reduces the number of shares outstanding and increases earnings per share. Another factor that's likely to lead to an increase in the stock's price. Coming in hot at number 4 is Philip Morris International, a powerhouse of American tradition since 1847. Philip Morris has recently increased its focus on smoke-free alternatives, which is a positive development for both consumers and the company. Smoke-free alternatives offer a healthier option for smokers and are less likely to be regulated by governments. By focusing on smoke-free alternatives, Philip Morris is staying ahead of the curve and positioning itself for future growth, from e-cigarettes to heated tobacco products. These new products are without a doubt less harmful than traditional cigarettes. Staying healthy is in, and so is the increased demand for PM products. Number 5 is no surprise, Raytheon Technologies, which has an arsenal of upward potential and a dividend yield of 2.7%, plus a rock-solid balance sheet with a debt-to-equity ratio of 0.35. On top of strong financials, the US government is also increasing its defense spending, which could benefit RTX, which is a major supplier of weapons and defense systems to the US government. Lastly is the increase in international sales. RTX has been expanding its international deals, which could help to offset any slowdown in US defense spending. While Lockheed may have Asia on lock, RTX took one out of the cookbook and recently started investing in new markets like India and South America, where the ROI is high. Enjoy some green on the screen, and to the absolute moon.